Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's a rainy morning here on the New Jersey, New York City waterfront. It's 27th of October, 2018, approximately 10:17 a.m. We have a few of our great members in attendance. However, this session will be recorded and uploaded to the Clueless Trading YouTube channel for free viewing. Do pass the word around that the Clueless YouTube channel, which is a very valuable resource for all traders, investors, or anyone who wants to know the reality of the markets, not the fake stuff. It's accessible to them as long as they have internet access. Simple as that. On that note, everyone listening to this should also try to follow our brand new Instagram account that's picking up a good number of followers. Great resources there too, where we highlight some of our more powerful trades, charts, and such on Clueless Trading Instagram. Please do that. On that note, let us begin. Full disclosure, this is purely for financial education and not for any solicitation or advice. So I want to keep this short and sweet, but at least explain a few things here, which has worked tremendously well. We just point out one thing. This is not a market forecast advanced coaching session. This is not talking about what's going to happen, what will happen. This is how to manage your trades intraday in the middle of massive volatility. Managing your trades intraday, or let's say overnight, that's really what we're going for here. We're looking at short-term movements, which is exactly what the markets are doing. Within a 24 to 72 hour period, let's say, that's the time frame. As I've mentioned many times on my real-time alerts, posts, charts, comments on the Clueless real-time feed, that you have to have certain proxies that you're looking at, certain indicators, or certain indicators, certain charts that you're looking at that's going to help you navigate, or at least make a couple of dollars in this extreme volatility. This is extreme volatility, and it's not going to die down anytime soon. Yeah, we might not get 600-point drops on the market every hour and then a bounce back and things like that, but we are going to be in an enhanced volatility range, which is going to be in the range of 100, at least to 100 to 200 points intraday going forward. So in order for yourself or for all my members to be prepared, they have to use certain tools which are the most effective. And what I'm going to share with you today is simply a very simple tool that's helped me navigate this market, and in fact helped me end the week on a positive, profitable note. Now, not many people can say that, and I'm talking about people out there who are screaming and shouting bloody murder and that the world is ending, falling apart. And it certainly looks like that at certain times when you wake up in the morning and the Dow Jones is opening down 500 points or 400 points and then cascading down. The reality is that there are many different ways to skin a cat, as they say in this business. But the reality is that there is a certain very simple tool that I use. This is one of the tools that I use that I'm going to share with you guys. That's what we do here at Clueless Trading. We try to help other people so that they can help themselves by practicing these strategies and make some money for themselves. I know some of my members are making some extremely decent money. One of them was in on Friday, Fish Eyes. I got to give him a shout out. He's a good friend as well as a very loyal member for many years, and he seems to get it. He has taken he has taken years. This was off ACS advanced coaching sessions with me. Paid the few dollars for my time, and again, it's a learning process. He gets it, but at the same time, you have to keep on adapting and moving forward. So saying all that, let's get into the nitty-gritty of what we are seeing in front of us. So the key to making some decent money in this type of market, one of the ways to do it is to simply trade the indices, trade the market. Don't have to be necessarily individual stocks, doesn't have to, just trade the market. So what's the market? The market is the SPY. The market is, I just want to make sure that you guys have full visual connection so you can see the screen that I'm showing, because I have multiple screens on this computer. Yep, you are on the right screen because I see the audience for you. Okay. Okay, great. So simplest way, here you have the spiders, S&P 500 ETF. You can trade the SPX, and I'm just showing you SPY and SPX, and then I'm going to briefly touch on the QQQs, which are basically the techs and biotechs. And I think personally, and I've mentioned this a few times on my real-time post, is one of the cleanest ways of trading the market aside from trading futures, because you're not held hostage to a single stock risk. You don't have to worry about what type of left field negative news or positive news if you're short the market, on an individual stock. You're just playing the clean overall market. We do it through the SPY, we do it through the SPX, we do it through the QQQ, we do it to the IWM, which I haven't traded recently for the right reasons, and we do it to the DIA, which is playing the Dow Jones Industrial Average. So I'm going to put the DIA here. There you go. This is the Dow Jones Industrial Average Diamond ETF. And we're going to keep these in the 15-minute range, because that's really what the intraday ranges are. You trade either the 3-minute, the 5-minute, or the 15-minute. So in the most simplistic terms, one of the most effective ways of doing it is on your computer screens, you need to have the structured VIX. Now, before I go any further, let me point out one thing here. One of the things that has helped me survive these type of carnage in the market, random structured movements, 3, 4, 5, 6, 700 point drops. I'm not going to be right on every single. I'm not a 5-minute trader. Will I trade intraday for big percentage profits? I share it with my members every single day. We do it. But you don't need to do that necessarily. But what I'm saying is what's kept my hands on the wheel, on the steering wheel, and drive this fast-moving car, to say the least. This is like a jet propulsion car, and not blow up and not skid off the road, is one of the best platforms that I use. And I'm going to give a huge plug for Quodd. Quodd is a platform that you're looking at. This is they use the bar chart platform, and it's QUODD. And this is the and I'd be happy to send an email to anyone who is interested in subscribing to them. I've been using them for 14 years now, or 12 years at least, more than 12 years. And from my Wall Street days, and I've mentioned it to a lot of people about Quodd. QUODD. I'll show you the website at the end of this ACS session. Call them up, do a free trial, see how effective it is. Because without these type of visual roadmaps, without this type of navigational tool, you cannot fly this massive trading engine called the stock market, and especially the options market. You cannot do it. This is fly-by-wire, okay? This is like flying a B-2 bomber miles above and then dropping the JDAMs over the bad guys, okay? It's really what it is. So it doesn't matter if it's pitch black night or if it's raining or bright and sunny. You see that on the screen in front of you, and you get to see the movements, and you know where to hit, where to take your profits, where to get in. And of course, this being the VIX, this is giving us a direction. You can trade the VIX. You can trade the VIX calls and puts of this chart. I do that sometimes, but I use this primarily as a proxy because this is an inverse proxy. It's the opposite of the market. You guys should know that by now. This is the volatility index. To trade the SPY, the SPX, and all those long ETFs, or you can short the call. I mean, you can either buy the calls or the puts, but I use those to trade the SPY, the QQQ, the SPX, even the DIA by using this chart. And that's what we're going to explain in very simple terms. So certainly try to subscribe to Quodd. If you have any interest, let me know. I'll send you the email. Many Clueless Day Trading members have been using Quodd for years now. They love it. It's very effective. And they give a very large discount on a month for the monthly fee for this platform, which is not just a charting platform. It's very comprehensive. For all my quotes and stuff, I use Quodd because it's very easy on the eye to look at. It is not a trading platform. You can trade through it, but you can use it for all your charting. You can use it for your code screen, other information and such. Okay, enough of that. So without this, you can certainly use Thinkorswim. You can use any one of the other platforms you're using, but I do not think that your charts will look like this. And what the charts look like means how much money you will have left in your pocket at the end of the day, or the end of the week, or the end of the month, because that is the reality of the thing. So, are we good with that? Yes? You guys understand what I said so far? Okay, great. On that note, one of the key features of using the VIX chart, especially the way we're looking at it, and I'm looking at it here on one of my 24-inch screens, on the screen array, is the way I structure it. And if you notice how I structure it, the uptrend lines, the resistance lines, the support lines, you'll see how accurate and mechanical and robotic and mathematical the VIX is. Because after all, the VIX is a derivative product. And being a derivative product, and I'm not a great mathematician, my son's very smart in math and understands all the advanced stuff, the financial engineering stuff that he's studying in college. But I'm just a simple guy like you guys. I just know numbers. So because it's so mathematical, I can structure it to the teeth, give or take a fraction of a point at times, where the VIX is going to turn, where it's going to go. And this type of predictive analysis is not just for you guys to look at. It's for you guys and gals to make money off. You can hear the people out there shout and scream. They can't make money off the market. The market's blah, blah, blah. What is the market going to do next? We're predicting with a pretty high degree of probability what the markets are going to do next, and especially on a short-term basis. Think about that for a minute, okay? Think about that for a minute. See, I'm delivering such amazing, accurate content, but I personally don't sit back and think. And I thought about it on Friday after the market closed. And I glassed a nice red wine, and I said, wow, what a week. And the P&L's green. And I thought to myself, you know what? All of us, not just me, we don't really sit back and appreciate the amount of powerful tools that you have in your hands, especially here at Clueless Day Trading, that you can utilize to navigate in the markets, navigate these treacherous markets. They're treacherous markets, no question about it. So let's get into this. So first and foremost, getting into the simplest explanation. Let me get the pen. There you go. My structures are in place. All you guys have to do is to try to read this. Now, I'm going to give you the basic explanation. If you want some serious, detailed analysis, obviously, you need to sign up for the ACS or advanced coaching sessions that's available on the website under members. I believe it's under the members area. And then I'm going to walk you through every nuance of it, how to read it. I'm just going to give you the basics right now because that's to get you guys started. So the key is these lines up on the upper lines are where the upper VIX can go. These are the supply and demand lines. So VIX here at 28, 29. I've also put the markers in, not just the markers, but the actual numbers, the price indications. So basically at around 28, 29, the VIX normally has a big reversal. What does that mean? That means the market on the other end will go higher. Let me just, so the S&P, I'm going to put the SPX here. So VIX coming down, simple terms, means the markets are going higher. And they happen literally instantaneously. This is a 1 hour chart. Each of these candles are 1 hour. I monitor it like a hawk, and I've taught many students, advanced coaching students, how to read these charts like a brain surgeon, okay, like a neurosurgeon, going in and fixing parts of our cerebral area. That's serious. Not that anyone wants to have brain surgery, but that's left for the ACS sessions. This is the basic picture. So when the VIX is coming down, it has a reversal candle. The S&P shoots up. You get a reversal candle like this, which slowly develops, and we don't know whether it's going to be this blood red, okay, by early afternoon or not. But we can see it developing. You know, at that point, it's coming off these marker points, which is a double top here. You can see that very clearly. This was the day before. And so when you think the markets are just going to completely collapse and die, oh my God, we're down 600 points, you start to scale into some longs. And if you are short by SPY puts on the other side, which we do quite often intraday, then you need to cover it because you're looking at this thing here because this is the first canary in a coal mine or the first indication that the front end of the market, which is the, bear with me 1 second. And I have multiple screens, but I'm just showing you for the purpose of this thing here. This is your S&P, right? That's your S&P. And when you're starting to get this at 11 a.m., look at the time at the bottom, at 11 a.m., then you are going to get at 11 a.m. a move that is going to generate for you anywhere from 60 to 100%, 80% of profits on your SPY calls. You can see the correlation. It is very direct. You guys can do this on your own computers. I know it sounds really basic, but trust me, if it's that basic, then why aren't people, reading the VIX, tracking the VIX on my charts and their own screens and making money? Because sometimes in life, the simplest things are so obvious, but you need to act on them. You can't be just looking at them. So right there, 11 a.m., bang, bang. Markets just shoot up. It hits 26.28 the next 2 hours. Now, these 2 hours is a long time in a volatile market. We know that. Every 5 minutes is a long time. That's why if you're looking to trade intraday, not necessarily on a 5-minute basis, then you see the candles develop like this. There's a very high probability the next candle is going to be higher. And this is a simple chart of the SPX, not the constructed ones that I show with all the lines and all the resistances and pivots and stuff like that. This is a simple one. But this is where you make the big money intraday. On a 5-minute, yes, you can make money, maybe this much. And if you're not looking at the VIX, if you're just chasing prices, you're basically just, the VIX is starting to come down right here. So you are, let me show it to you. So the VIX is starting to, this is a confirmed double top here. This is actually a triple top, 1, 2, 3. The VIX is developing a red candle. and I'm going to get into the stochastics here. This gives me the idea whether or not this is going to expand lower, or whether or not it's going to come here and then move another move higher, which it does. There are fake sell-offs on the VIX, which means fake moves on the pull-up of the S&P, and then boom, they drop it again. So this gives me a clear idea, and I'm looking through it with precision. It's like a precision periscope, like you're underwater in a submarine, in a nuclear submarine, and you have the periscope, the electronic periscopes now, obviously, which are telling you where the battleships are, where your enemies are, where the bad guys are, where the algos are. And this is what gives me the internal readings, whether or not there's a higher probability of the VIX collapsing and the markets ramping. And these are good for 80 to 100% plus on cheap SPY calls intraday. And believe me, many members are doing it, or some members are doing it. I don't know. I know the ones who are doing it. And I tell them, buy. Now, when I say buy, I'm not just randomly looking at a price or feeling good. I'm saying it based on what I'm looking at on the VIX. And I am saying it based on what I'm seeing on the front end on the actual S&P, which is the market. So this is the market. There's your VIX. Now let's go back to the VIX here. Keep this a little bit minimized so you can see a more cleaner picture of the VIX. Okay, there we go. Now, candle dynamics and reading candles is obviously, it's like art appreciation, I guess. It's like going to the Guggenheim or Museum of Modern Art, MoMA, or Met, or many others, many other museums in New York City. Just mentioned a couple of the bigger names, and staring at art, or you take an art appreciation class. So you have to kind of, the more you look at it, the more you start to see things. It's and the more you make, and the more money you make. Simple as that. So the key thing here is, as the VIX is coming down, the markets are going to rally hard. You get a double barrel move like this, you basically can generate, I repeat, anywhere from 80 to 140% fast on your SPY calls. They can go from the, let's say they were cheap, 60 cents, 40 cents. They will ratchet up to $1.50, $1.20. That's 200% almost. It's happened. But in order to react to those things, you don't necessarily have to buy the cheapest point of the market, which means the highest point of the VIX. You have to basically buy as it's falling. I generally tend to act pretty much off this level, where I put my initial buy in on the SPY calls. I see it develop. If I see the candle develop, then it becomes a bearish engulfing red candle. I add more as it's developing, and very sweet profits, very sweet profits. You forget what's happening in all the garbage that you're hearing in the news and blah, 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 because you're making money. Once you're making money, you're focused in the zone of making money. You're trying to fight the algos, and you're trying to stay one step ahead of them. You cut out a significant amount of the noise out there. Otherwise, if you're not, then all you're doing is focusing on the negative aura, or the negative dark clouds that are constantly being talked about in the media, because that's the job, right? They bring out all the bearish analysts. They bring out the world is falling apart. And all the negative news just permeates your brain, and you're doing nothing. You're sitting there frozen while all this stuff is happening, and active traders who are trading off my charts, my alerts, are making some money, or some of them are making a lot of money. So back to the VIX. The markers are there in place to signify the tops. The markers are there in place to show where the VIX can bounce from. Now, if you look at my actual posted chart, I actually put, I'll try to bring this into the screen here. I put big arrows so all of you can be helped more. This is my constructed VIX with the arrows. Now, real simple read on the arrows. If the VIX gets down here, it's going to bounce. VIX gets up here, these are sell points. So these are the points that you want to be going long the market through all the different market-related calls or going long a stock. And these are the points where you have to watch out where the VIX is going to bounce from. It's not a coincidence based on my structure. This is an uptrend line that the VIX has bounced consistently off the lower end of the uptrend line. Consistently. So when they tell you out there, when your brain tells you inside your head, like you don't know what the heck's going to happen, fall back on these very precise, almost crystal ball-like robotic charts and try to make a determination. And chances are you're going to make decent sums of money. So the VIX now, this is not the closing view, I believe, of the VIX, or close to it. So the VIX, basically, when it gets to the lower end of the scale here, which is around 23, it's a very high chance it's going to bounce. That bounce can be a big bounce, or it could be a failed bounce. We will have to see. And part of the reading is done through the internals. Keep in mind, the VIX moves very fast. So if you're looking at shorter time frames, such as the 5-minute or the 15-minute, your head's going to spin, and you're probably going to be thrown out of trades very quickly. I look at the 1-hour ones, which allows me to capture more returns on my money. At the same time, keeps my brain a little bit steadier because I am not watching the 5-minute complete monkey on crack, as I like to call it, or monkey on hot tin roof type of movement that the VIX does. Now, you could certainly use the 3-minute, the 5-minute and stuff on the stock trading side. That's a different story. But for the VIX, I like to use the 15-minute. I don't really use the 15-minute that much. I primarily use the 1 hour. It works great for me. And it should work great for you guys. So anyway, so saying all that, let's clean this out. Get the pen back again. So once it gets down here, either if it breaks through this, uptrend channel, there's a high probability that it's going to hit the lower end of the mark, which is close to this previous gap fill. That's around 2050. So in this type of case, what's the proper course of action where you're going to put some nice dollars in your pocket? As the VIX is collapsing, you want to be long the market. As the VIX is rising, you want to be somewhat short the market. That's really as simple as that. And every single one of these arrows put in place is not for visual enhancement, not to get you all excited, like, ooh, look at those little arrows. It's there to tell you where the VIX is going to bounce from, where it's going to fall from. And I'm pretty goddamn right, I would say, in this type of market, at least 80 to 90% of the time on these charts. So if you're not using the VIX to play the market on the long end or even on the short end, VIX rising, market falling, VIX rising, and when it happens, it just accelerates. So you can do a similar, identical short trade before you go on the long side. Okay, let's clean this out. Now, like I said before, the mechanics of every single nuance of how I read the candles and such, that I leave. I spend a lot of time on the advanced coaching sessions. If somebody's interested, please sign up. I'd be happy to spend my family time away from the markets to spend an hour, hour and a half explaining all that stuff to you so you become a professional driver, a real professional trader. Keep in mind that I'm not the master of reading all kinds of numbers and such. I'm not reading what block trades are coming through. We have great members who present that information on the website chat room. I'm not there looking at level 2. See, I'm kind of simple that way. I like to trade off charts. I like pictures. These pictures are speaking 1,000, 1,000,000 words to me. So I like to keep my brain. Like I said, I have 3 brain cells left. I cannot expend that much energy scanning through, looking for what these big trades and stuff are coming to. Because if these big trades were correct, as I've said many times on my webinars, so many times, then why aren't they making zillions of dollars? And why these hedge funds running those programs, block trading programs, that are sold for a fee in many cases to so many retail investors who think that if they just follow a block, they're going to make money? Then why these hedge funds all underwater? The average hedge fund for this year is down by 7 to 8%. Markets are still positive for this year. Why is the so-called smart money, the big institutional block trading money, why are they down for the year if they're that good? Think about that for a minute, okay? Think about that for a minute. They're useful tools to keep in mind, but I don't think they're great trading, vehicles if that's the case, because they don't seem to be right. So anyway, the key thing is, that's just my opinion. The key thing is that I like to trade off charts. The more I look at them, the more they talk to me. Same thing can happen with you guys. That's why I'm doing this free session, just to give you a basic understanding. So that's it. Arrows are where the VIX is going to turn. Lower Bollinger, all that stuff. This is the previous point where they did turn. If it breaks below, if it's going to hit the gap, if it goes below the gap, and these things are obviously doesn't happen. If this VIX falls from here all the way to the gap, that means the markets are going to be up 600 points. Can it happen? Sure can happen. If the VIX just crashes, tries to, and then keeps on crashing all the way down to 1850, which was the last level where it took off like a rocket. Remember, it was in a trading band before it just took off. Then created another trading band between 21 and 24. Oops. And then took off. And now back into that trading band. Right? So that's really what it's doing. Get the broader picture. So here is one. 2150 to 2472. This was the previous one. Then it broke above that. And it's now falling back into the trading zone number 2. Range trading, if you want to look at it that way. So if it breaks below this, then it's going to enter back to the trading zone number 1 or trading range number 1. And that means the market would be up 1,000 points in a matter of two days, which is simply 500 points a day. You get those in the middle of the day, right? The reversals itself are worth hundreds of points, and the crashes, flash crashes themselves, are worth what? 300, 400, 500, 600 points, right? That's intense, enhanced volatility. Now, getting back to it without waiting, is you look at, then we look to see what are the probabilities of the VIX falling lower, i.e. the markets continuing their reflex bounce. So we look at the internals, which is most importantly shown by the slow stochastics. The slow stochastics has literally a 90+% hit ratio as to which way, to give us an indication whether the VIX is going to go up or down. And the slow stochastics applies to all stocks, all different vehicles that we trade. I'm showing you about the VIX here. So as the slow stows, which were starting to cross over down, that's why slow stochastics cross over down. There's no guarantee that they were going to cross over down, but as they start to do that, then these type of things happen. As they try to accelerate down, that's why I have a red line here. As they start to accelerate down, that means the VIX, will come down a little bit lower. That means the markets will go a little bit higher towards the levels that I've shown repeatedly. I'm not going to get into that right now. It's all on my chart. So basically, we could hit to the 2,700 mark if the VIX gets towards 23 or towards 22. That means we can overshoot and go to 2720. Believe me, it's all mathematical. And I'm showing you the simplest way you guys can trade these. You don't need some rocket scientists or some service that charges you $500 a month to give you algo figures and all that garbage. Okay? So the point is that, let me get out of the screen. So I take the structure of the VIX and I obviously structure it, but then on top of that, I add these arrows so that all my members who are, let's put it this way, all my members can focus a little bit more and they know the levels that the VIX is going to turn higher or lower. I mean, this is real kindergarten stuff, guys. But I do it so that you start focusing your eyes and learning how to read these things. This isn't like an online real-time tutorial that you guys are getting in the middle of the trading day. So here we are. This is without the arrows. So there's multiple things going on here with the moving averages, with the candle structures, the pivots, all that good stuff. And like I said, sign up for the ACS. More than happy to work with you guys, explain every single nuance that's happening here. So you guys can be as predictive as I try to be. Even in the most volatile markets, you need to be calm. And these are the type of charts that let you stay calm and not do stupid things or help you make money on the long side and the short side. So saying all that, if you look at the slow stochastics, you're going to see very clearly here that it is starting to, I was looking at it very, very closely. That's my job. And for the first part of the day, it was kind of just like around here. There wasn't an indication that it was going to turn around. Remember, every time the slow stows go from overbought to oversold, this is overbought, oversold. Look how exactly that point is. And exactly that's where the VIX turned. So the markets kept on rallying, and then all of a sudden, they started selling. And you can see that clearly using this. Oops. Look. It's not rocket science, guys. I'm not sure why I'm having this problem here. So that's why I marked these bottoms. These are the bottoms where you are going to, look at that. Okay? Let me clean this out. Markers. Now people, all of you can see this. Even if I didn't have a single marker, you should be able to see it. But again, I try to do it so I can help all my members. So that's it. So at this point, if you notice, it turned, the markets rallied. So it doesn't matter, the markets are going up 50, down 50. The overall trend in the market by as the afternoon rolled by, looking at Friday, for example, there was a big sell program at 2 p.m. That was this VIX right here. See that? One second, let me get this big. Right there. No reason to fully panic. Why? Because the slow stows were still pointing down, even though we had a 2 p.m. big spike on the VIX, the slow stochastics, which are absolutely the ultimate indicator. And I've shown this for years now. And many of you trade off them and believe and understand them. And there are some of you who are stubborn enough not to care about it. So you keep on shorting while the VIX still keeps rising, and then you get burnt because you're not keeping this in mind, that the slow stows are still kind of curling down. So if you're trying to short the market up here as the VIX is spiking, you're shorting the market here, you just got burned because boom, within 5 minutes, 10 minutes, 15 minutes, the market shoots higher as the margin sellers dissipate and you sit there holding the bag, again, praying that we get another 400-point drop into the close because you are fixated with just price chasing and price trading. You can't keep on doing that, guys. Of course you're going to watch price, but you got to watch these charts in, in tandem with just trading prices. Prices can move in a flick of a second. You know that. It takes what? A nanosecond. A nanosecond for an algo to move. It takes a second on our screens for a price to move. So as long as the slow toes are pointing down, we probably will have an up open on Monday. Just basic, technical stuff, no guarantees. And if we do, the VIX will be oversold back to the lower end of this range, this uptrend line. This uptrend is still intact, guys. Even though we had a big sell candle right at the close on the VIX, it doesn't mean that the VIX needs to crash and burn. There's a gap here. That's why it's in its light, this light red. It could bounce off the gap. The slow stores are telling me that the VIX will probably slip down a little bit more to its pivot. That means the markets will open higher. And if the VIX the slow stores get overbought, what do you think is going to happen? The slow stochastics get overbought. The VIX comes down towards these major support levels. It's going to bounce. Now, whether that bounce is going to take us to 29 or whether they're going to get stymied and hit with resistance here. These are multiple resistance points and then fall. I mean, this could be looked on as a head and shoulder. Head, left shoulder, right shoulder. We don't know that yet. But here's your left shoulder. Here's your right shoulder. Here's your head. Multiple heads, but let's call this one. So it's a head and shoulder pattern. Remember, this is a head and shoulder pattern with a neckline. The neckline for the VIX, the first one is, the real neckline is at 2050. Is it possible that the VIX comes and retests the 2050 gap neckline and then bounce? Absolutely. Can that happen by early next week? Sure. What does that mean? If it falls all the way down here, that means the markets are going to be up 600 plus points. So you want to take advantage of that. And you don't want to be sitting there saying, oh, I'm going to buy the market when it's up here, or even going up here, or even closing up towards the 2700 level. No, you want to be a seller. And you look at my alerts, you look at these charts I'm putting through, you look at your screen, and you're feeling good. So there's really nothing to it. Serge, you definitely need to get a headset because I didn't even notice your questions, when I'm just looking at your question. Now, do you watch the K line? What are you showing on the slow stow arrows? I already explained all that stuff. The arrows are, what I'm showing is the slow stows arrows are showing that it's going to basically go down. That's why it's a red arrow. And you do have to get a headphone. And yeah, when the arrows simply means, the arrows means that's where they're going to, the red arrow means that's where you're going to start to come down. When the slow stows get overbought, I have the markers, and in some cases I have the arrows. It simply means it's overbought. That means the VIX is going to have a higher probability of starting to pull back. Okay, it's really as simple as that. I think I explained all that in the last 15-20 minutes. So that's it. When this gets oversold, that means the VIX is going to rise. That means the markets are going to pull back. What are the things? Let me see here. So that's it. You have to look at the resistance lines. You have to remember resistance becomes support if it moved above that. So now it's support. It blew below the support. Chances are that it's going to come down a little bit more. Then you have major supports here. You can see that support lines are designated in red at 2206. So if the VIX does get to 2206, markets will be up 400-500 points. at this point, the VIX will bounce. No question about it. At that point, the formation will become a W formation instead of a head and shoulder. Right? There you go. Now it's a head and shoulder. Head, left shoulder, right shoulder. So just to wrap up this session, because I mean, if you need to get far more into some detailed analysis, then like I said, sign up for the ACS session. Serge, you're asking a lot of questions. I highly suggest that you get a headset because, you know, you watch the orange line. Yeah, I watch all types of lines. You watch the K line crossing down the 80 line. Yes, it's simple stuff. And this is something you need to study on your own. 80 plus is when it's overbought. And remember, the stochastics are the second derivative of the relative strength index, and below 20 is generally a buy, above 80 is generally a sell. Same thing with stocks, same thing with the stochastics. Okay. And in your case, Serge, what you really need to do, you need to sign up for the advanced coaching session so I can teach you a lot of the basics, questions that you're asking, so you'll be in a position to understand the advanced stuff that I'm showing. And also importantly, like I told you before on the first free complimentary session, that there are great videos on Google and as well as on my YouTube channel at under new member intro videos. You really need to go through all that stuff, okay? And I know the way you are, you're going to pick it up real fast. That's really going to help you move forward. So that's the quick rundown on the VIX. VIX red candles, market's going higher. Got to watch these candles within the framework of all the different channels. This is an uptrend channel, still an uptrend channel, even at the close at 4 p.m. If we start to see them break down more, we start to see the slow stochastic still moving down. That means there's a higher probability that the market is going to move higher. Once the market moves higher to predetermined levels that I've shown on my real-time Twitter feed, feel free to look at those. And the best way to do it is take a quick screenshot. Take a quick screenshot of some of the most important charts, of this chart, for example. And so this way you can refer to it when you're looking at it, you know, an hour down the road or the next day or whatever the case may be. Or you can just scroll down my Twitter feed and say, okay, this thing, that's really how you learn. You can't just look at a chart and then completely forget about it, because that doesn't do anything for you. It doesn't put a single penny in your pocket. And the best way to do it, you can replicate this on your screen. You can get Quodd, which would be the best replication. I can certainly, like I said, I'll show you the site and I'll send you I'll send anybody the information so they can communicate directly with them. And then, of course, you can replicate it any of the other platforms that you are trading on. So let's look at the VIX here. You want to buy the SPY calls when the VIX is topping, red candles are appearing. You want to buy the SPY puts when the VIX is rising and the red candles are, and the green candles are shooting up, just like a stock. You start to see these big moves. 10 a.m. there was a VIX sell here real fast. That was a fake one. Why? Because the slow stochastics were rising. The slow stochastics were rising. So this quick VIX sell-off, which means the market popped up a little bit at 11 a.m. was fake, because the slow stochastics are telling us that the VIX wanted to go higher. The exact is happening right here. The 2 p.m. sell-off on the market right there might have freaked out many of my retail emotional traders or simple price watching traders. Didn't freak me out, because this is still pointing, this is still crossover down, and guess what happened at 3 p.m. Bang, bang. Markets reversed up and closed, you know, and then bounced. Didn't go back to the high of the day, but bounced hard, a couple of 100 points. That's it. On that note, have a great weekend. Just want to give it a little flavor of this thing here, which I repeatedly keep on showing. I'll see you guys Sunday evening, 8 or 8:30 p.m., possibly 9, depending on, I want to see how the Chinese market's open. That's where we do it at 9 p.m. Sunday, Eastern Time. You guys have a fantastic weekend. Thank you for listening. Like I said again, you want some real detailed analysis of every single aspect of this machine that we trade called the VIX, or use as a proxy. Then sign up for the advanced coaching sessions. I'll see you guys tomorrow. This is going to be a fantastic week. It was a good week for a lot of my traders. And congratulations to some of you who did not have a good week. I don't blame you. These are dangerous markets, and if you're just trading prices, you're going to get screwed. It's a fact. I hate saying that, but it's true. You want to trade charts, you're going to come out okay. And that's what's it going to be going forward, forever and forever. Trade charts, not your opinions or feelings. God bless you all. Thank you.